because it will never be set again. It is not on the new syllabus. Okay. Part B, the accounts clerk of DEF Limited, while preparing financial statements, discovered that the totals of the trial balance were not in agreement. He nevertheless proceeded to prepare the financial statements. Below is DEF's statement of financial position as at 31st December 2020. Okay, so here they are giving us an extract of the balance sheet of DEF Limited. It is an extract of the balance sheet, and in here we have what you call a suspense account somewhere. Okay, a suspense account to justify the other reason that they told us that the trial balance was not in agreement, but they proceeded to prepare financial statements. Therefore, they decided to introduce a suspense account to balance off the balance sheet. So now, on scrutiny, the chief accountant discovered the following errors. So these are the errors that were discussed that were discovered by the chief accountant. Therefore, they decided they want us, but this is the I think this is not the number that I wanted. The number I wanted in March 2020, it's March 2021. It will give us more insights. Sorry about it. Though even that one is correction of errors, you can do, but March will do better. It will give me what I want. Let's do March. Let's do March. March 2021, question 3. Let's do March 2021, question 3. Some students have a problem. A tutor asks over 5 times and they don't respond, but they are in my inbox now identifying themselves. Okay. So March 2021, question 3. It will give us, it is in the same format like the other one. So I expect that after doing this in your free time, you'll go and do October 2021, question 4. October 2021, question 4. It's in the same format, but I'm interested in this. The accounts assistant of Excel Limited prepared the financial statements despite existence of a suspense account balance of this amount. The statement of financial position as at 30th June 2020 is provided below. So they are giving us a balance sheet as at 2020. But this balance sheet has a suspense somewhere. Okay? It means the trial balance had refused to balance and they decided to introduce in a suspense account to balance the trial balance so that they can come up with financial statements. So they want us to show the journal entries to correct the above errors, to prepare a suspense account. At least we have seen these first 2 in the previous 2 numbers we did last class. And then part C, they want us to prepare a corrected statement of financial position as at 30th June 2020. Okay? To prepare corrected statement of financial position as at 30th June 2020. Okay? So now we are going to pass journal entries to correct these errors. After correcting them like the way we did last week, we prepare a suspense account. Then afterwards, we shall prepare a corrected statement of financial position. And this is my interest today. I know I taught these ones last week. And for those serious students, they have been trying out numbers and they have been sharing with me and I've been correcting them. Okay? And they have been correcting them. So let's begin with our correction of errors. So we are to come up with journal entries to correct the errors that were given. So we have details, and then we have debit and credit. This is the format of journal entries. Journal entries, we said they're the same as double entries. So we are going to correct these errors, and after correcting them, we shall prepare the suspense account. Are we ready to start?
Yes.
Okay. So note number 1, the examiner is saying the purchases for the period were undercast by 3 million. The purchases for the period were undercast by 3 million. We said that undercast and overcast errors don't bother to follow these steps, but rather you correct that account that is either undercast or overcast, then the corresponding entry will be a suspense. Hope you remember. So purchases, since purchases were undercast, it means the purchases figure they took was lower. So can you increase purchases? Purchases increase by debiting. Therefore, I'll debit my purchases with 3 million and I credit automatically my suspense account 3 million. Okay. All my amounts are in shillings, 1,000. All my amounts are in shillings, 1,000. All my amounts are in shillings, 1,000. Okay. All my amounts are in shillings, 1,000. So as easy as that, we did overcast and undercast errors last week. Okay. That we said undercast, overcast errors don't even bother going through the process of correcting errors, but rather correct that account that is either overstated or understated. You must be knowing the double entry, of course, that when this account is increasing, I have to debit. When it's reducing, I have to credit. You must know that. We covered double entry in our 5th class or 4th class. Therefore, I'll not go back there. Then purchases increase by debiting. Therefore, that's why we have debited purchases to increase them and automatically credit the suspense because it is an overcast, it is an undercast error, which we talked about last week. Note number 2, the extension to the building that cost us 65,560,000 was recorded as repairs expenses. Buildings are depreciated at 2% on cost per annum. So we said number 1 step, you must identify the error that was committed. So if I may ask, what error was committed in note number 2? What error was committed in note number 2? What error was committed in note number 2?
Building was recorded in repairs account.
Buildings was treated as a repairs. Very good. Therefore, for us to correct this, you have to remove this figure from the repairs account. Okay? You have to remove this figure from the repairs account and take it to the buildings account. So we have identified the error. So we are going to correct the error. You correct the error most so if a transaction has been posted in a wrong account, you correct the error by reversing that transaction. So they had debited repairs. So you correct the error by crediting the repairs account. So we shall credit the repairs account to remove that figure. It is 65. It is 65,560. If I'm to get this in decimals, what do I need to do? 65,560, or I just chop off the 3 zeros. 65,560. So what I've done, I have credited repairs to reverse the entry that was posted in the repairs. Because they have told us the value of the building was recorded as repairs exchange. It means as repairs expense. It means they debited repair. Okay. So for you to remove that figure from the repairs account, we shall credit repairs to remove that debit. Okay. So we have corrected the error. Let's pass the right entry. The right entry was debiting buildings because buildings are non-current assets. This should be debited. Okay. So you debit buildings. So we identified the error. We corrected the error by crediting the repairs to reverse the transaction. Then we have passed the right entry by debiting buildings. The 4th step, you compare the debit and credit to see whether there is a difference. So in this So in this case, we don't have any difference. Therefore, we shall not pass any suspense. Okay? We shall not pass any suspense. So we have followed the 4 steps to correct that error. But the examiner is telling us that buildings are depreciated at 2% per annum. He's giving you this phrase because initially they had not recognized this building's figure. Therefore, you have now recognized the building figure in the correction of errors. Can you go ahead and compute the depreciation to that figure? Because buildings are depreciable. Okay? So we shall debit depreciation and credit accumulated depreciation. This is the double entry of depreciation that we have done before. Okay? So depreciation, buildings are depreciated at 2% per annum. So we shall compute 2%. We shall compute 2% of 65560. Okay? 2% of 65560 and see how much. So the depreciation is 1331. 1331. So this entry had those transactions. Okay? This entry has had those transactions. Okay? This entry had those transactions. The year is here on top of the question. This entry has had that. You had to correct the error and then also compute the depreciation for this building's amount, because initially they had not computed it because they had not recognized buildings. But since you have now recognized the buildings, go ahead and compute the depreciation for the buildings. Guys, are we together on that transaction? Anyone that needs clarity? Any clarity needed on that transaction? Okay, we go to note number 3. We go to note number 3. Note number 3, they are telling us a cash receipt of 500,000 from a debtor was credited to the cash book as 50,000. Was credited in the cash book as 50,000. Let us deal with this alone. Let us first deal with this highlight in green. A cash receipt of 500,000 from a debtor was credited to the cash book as 50,000. Can someone tell me the error that was committed, that transaction?
Error of original entry.
I think last time, if you attended the class, I told you all what I need is not the type of the error, because I know you know the types of errors. Errors of omission, original entry, complete reverse of entries, compensating errors. You know them, but I want the specific error that was committed.
They credited the cash receipt in the cash book.
They credited the cash receipts, which is wrong. That was the error that was committed. Because we all know that when you receive money, you have to debit the cash book. Okay? You debit the cash book because cash is increasing or bank is increasing. Okay? But what they did, they credited cash book. Okay? So the key thing is, when I was teaching this thing, even these things I've copied them and highlighted them there. When you are reading correction of errors, be open-minded on these two words, debited, credited, because they show you direction. They show you which error was committed or which error was not committed. Because I told you, once you read, for example, this note, a cash receipt 500,000 from a debtor was credited to the cash book. Ask yourself, were they supposed to credit the cash book or not on a cash receipt? This word alone can direct you on which error that was committed. That's why I'm not interested in your types of errors, because I know you can cram them. Okay? But here we are looking at understanding and identifying the error. When I was teaching, I told you the most difficult thing in correction of errors is identifying the error. The moment you identify the error and you know your double entry very well, you can correct the error. Okay? So here the mistake or the error committed, they credited cash receipts in the cash book and moreover with the wrong amount. Because we had received 500,000, they credited with 50. So the entry is wrong, the side is wrong, and the amount is wrong. So can we now correct the error? Since they credited the cash book, can we reverse that entry by debit the cash book with the amount that they posted there, the wrong amount that they posted there? Remember, we chopped off the 3 zeros up here, so it will be 50. Okay? So this debit of 50,000 is reversing the other credit of 50 that had been made in the cash book. Are we together up to here?
Yes.
Then the next step is pass the right entry. What were they supposed to do? They were supposed to debit the cash book. So can you debit the cash book again with the correct amount now, 500,000? Okay? So when correcting, you correct with the same figure that was posted on the wrong side. Same figure to remove it. Okay? Then when passing the right entry, you pass it with the correct amount that was supposed to be posted. So we are done passing these entries here. Okay, I'll not go to the fourth step because we have not yet completed the whole paragraph. Then let's complete the paragraph. Then they are telling us, and debited to the debtor's account 5 million. And debited the debtor's account 5 million. And debited. You ask yourself, when a debtor has paid me money, do I debit his account or credit his account? What happens?
Credit the debtors.
We credit the debtor's account because the double entry is we debit bank or cash and credit the debtor's account. But what these people did, they debited the debtor's account instead. So this is the error that was committed, debiting the debtor's account instead of crediting it. So can you correct this error by reversing this 5 million from the debtor's account? So what we do, since they debited the debtor's account in error, when correcting, we shall credit debtors, okay? We shall credit debtors with 5 million to reverse that 5 million from the debtor's account. So this credit is reversing the other debit that was posted in the debtor's account in error. Okay, you have now corrected it. Can you now pass the right entry? They had to credit debtors with 500,000 because the client had paid 500,000, not 5 million that was debited. So we have reversed the debit that was posted there of 5 million by crediting the debtors to reverse the debit of 5M. We have passed the right entry by crediting debtors 500,000. So now the fourth step is compare the debit and credit of the transaction. If there is any difference, pass it to the suspense. So we shall compare the debit of the transaction. The debit has 550, whereas the credit has 5.5. Okay, so it means the debit is lower. So it means our suspense will be put on the debit side. Our suspense will be put on the debit side, and the suspense is that amount. Okay, the suspense is that amount. So the suspense is always the difference between the total, the highest side and the lowest side. Okay, the difference between 5.5 minus 550. It gives you the figure to go to the lower side on the suspense. Any questions about that? Any questions about that transaction? I'm sure I'm going it step by step, so because I want you to understand how to use these 4 steps. The moment you understand how to use them, you will never go wrong. Okay? And we said these ones that are highlighted here, you don't need to use the steps. I told you what to do in the previous numbers. Okay? Any questions if I proceed?
No question.
Okay. Note number 4. Prompt Supplies Limited had an outstanding balance of 4 million that was paid twice using EFT. The company refunded the overpayment. So we had a supplier called Prompt Supplies Limited. They were supplying us. Okay? They had an outstanding balance. They were demanding us 4 million. So what we did, we paid them. But while paying them, we paid them twice using EFT. And what happened? Before the year ended, Prompt Supplies had refunded the overpayment. Okay? It means we had paid them 8, but before year end, they had refunded back the 4 million. So what error was committed here? What error that we need to correct?
CP, I think there is no error since we refunded the overpayment.
Okay. The thing is, there is no error because the error that had been made of paying these people twice, it was actually reversed by the other people paying back the money. Okay. So there is no error that was actually committed here. So in exams, you go and tell the examiner on note number 4, no error. Okay, you just put no error, you will get the marks. Okay, because just identifying that there is no error, it is actually you get your marks. Are we together? So there is no error that was committed here. Why? Because the overpayment that had been made by the company, the other suppliers refunded back the money. Therefore, there is no error that was committed. We can proceed.
Excuse me, CP.
Yes, Betty.
I beg your pardon on the datas. My internet had gone off.
Which data?
Number, that one of number 3.
Where exactly?
Why we are debiting, why we are crediting datas?
The reason we are crediting data, the error that was committed, when, if I may ask you, Betty, if a data pays money, what entries do you pass in the book? If the data pays money.
We debit cash and we credit datas.
Very good. You debit cash and credit data. Very, very good. So what these people did, they debited the data's account with 5 million. They debited. And yet the debtors had paid 500,000. So what they did, they debited the debtors' accounts, which is an error, not so. So you had to reverse this debit. And how do you reverse it? By crediting the debtors with the same amount that they had debited. So this one, we are correcting the error. Then the second credit, we are passing the right entry.
Oh, thank you. I got it now.
Okay. Note number 5. Depreciation of computers 1.3 million was entered in the statement of profit or loss as 3.1. The correct amount was entered in the corresponding account. So the corresponding amount, the corresponding account has no issues. The issue is entering a wrong depreciation figure in the profit or loss statement. The depreciation of computers was 1.3, but for them, what they did, they entered it as 3.1. That simply means that the depreciation of computers is overstated, okay? Is overstated because they took 3.1 instead of 1.3. And we all know that depreciation is an expense. It means that they debited profit or loss statement. They debited. Because I told you when they said debiting, when I said debiting profit or loss, I mean recognizing an expense. Because depreciation is an expense. So when they are actually, they overstated, they took 3.1 instead of 1.3. So can we reduce the depreciation figures? And an expense reduces by crediting, right? So we shall credit depreciation. Okay, or someone can say I'll credit profit or loss, it is the same. So I'll credit depreciation with the difference, The difference is 1.8, is 1.8, okay? By crediting depreciation, you are reducing the depreciation expense because expenses are debits. So when you want to reduce them, you credit them. And automatically, we shall debit suspense. Why? Because this is an overstatement, understatement error. Where I said overstatement or understatement errors don't follow even the steps, but correct the account that has an error, which is depreciation in this case, and the corresponding entry automatically goes to the suspense, okay, to the suspense. So depreciation had been overstated. They had taken 3.1 instead of 1.3. So the difference, we shall reduce our depreciation expense, and then the suspense account will be debited. Any questions? Okay. Note number 6. A check of 5.6 million received from a debtor was debited to the bank account and credited to the sales. Can someone recognize or bring out the error that was committed in note number 6? What error was committed in note number 6?
The check amount was credited the sales account.
Very good. Very good. The error here was made here. They received a check. We received a check. Okay? After receiving a check, they debited bank, which is correct, because bank is debited whenever you receive money. Okay? Bank is debited when you receive a check. So that is very fine. But what they did later is wrong. They were not supposed to credit sales. Already I asked Betty, if a debtor pays, what are the double entries? We debit cash or bank and credit the debtor's account or the receivable. So what these people did, they debited bank, which is okay, but they credited sales instead of crediting the debtor. Okay? So the error is they credited the sales account. Can you reverse that transaction from the sales? Sales are always credits. So when you are reversing sales, we debit. So we shall debit sales 5.6. Okay? We shall debit sales 5.6 to remove this credit that had been posted there. And automatically, since the bank account they posted right, okay? The bank account they posted right, we don't have any issues with it. So the corresponding account is correctly passed. Automatically, this double entry goes to the suspense because the other account was correctly posted. Okay? The bank account was correctly posted. Are we together, guys?
Yeah. Yes.
Excuse me, CP, I have a question.
Yes, please.
On note number 5. I want some clarity on a statement you said of depreciation being debited under profit and loss. There is a statement you said about it.
I think if I remember well, I said that whenever they say debiting profit or loss, it means they are recognizing an expense, okay? And whenever we say crediting profit or loss, it means we are recognizing an income, because we know that incomes are credits and expenses are debits. So at times, when correcting these errors, that's why I even put in brackets, or another student can say, I credit profit or loss. Crediting profit or loss simply means you are recognizing an income. Why an income? Because the expense is reducing. Because whenever expenses are reducing, automatically profits are increasing. Okay? So since they had taken a higher depreciation figure and you are reducing the excess, because the excess is 1.8, you are reducing depreciation. Depreciation reduces by a credit because it is a debit. So any expense is reduced by crediting them. So since I'm crediting depreciation, an expense is reducing and indirectly incomes are increasing. Because when expenses are reducing, incomes are increasing. So that's why I said at times in some books, when they're recognizing an expense, they debit profit or loss. They may not be specific that debit rent. Okay, they can say debit profit or loss in brackets rent. Okay, to tell you that expenses are increasing. Are we together?
Yes.
Yes, Doreen. Doreen, you had put up your hand.
Yes, please. On note number 6, don't we correct the error by crediting the debtor's account?
Oh, very good, very good, very good. Very good, Doreen. You are right. So what we did here, we corrected the error by reversing the cells that had been recognized. Then we had to pass the right entry. The right entry, they had to credit the debtor's account. Very good. So we had to credit the debtor's account. You're very right. Non-suspense. Very good. Because we identified the error, they had created cells in error. So we corrected by reversing that. We debited cells to reverse the credit that had been put there. The third step, we had to pass the right entry. The right entry in this case was crediting the debtors, because when a debtor pays, he has to be credited. And then there is no difference between the two. Very good about, because I had not seen that. Okay, note number 7. No entry had been made in the company's books for bank charges of 67,000 debited in the bank statement. So this is an error of omission, where we said errors of omission, you don't even follow the steps of correcting errors. Don't follow these steps. Errors of omission, enter the transaction the way it was supposed to be entered. Don't even think about the suspense. Errors of omission will never have a suspense, okay? But rather enter the transaction the way you had to enter it in the first place. So bank charges are expenses, so we shall debit bank charges. Or some books, or a student can say debit profit or loss. Recognize an expense, okay? 67,000, and then credit the bank, credit the bank, okay? Credit the bank in brackets. I'll put cash book. I'll put cash book, okay? 67. So bank charges are expenses. That's why we have recognized, we have debited bank charges, and then we shall credit the bank or the cash book, bank column. So that's the double entry for bank charges. Bank charges. They had not been entered, therefore it was an omission. Note number 8, share capital of 405.4 was brought forward in error as 450.4. When you look at this statement, the balance that they brought forward was higher than the correct figure they had to bring forward. We all know that share capital is a credit because this is equity. It is a credit, it has a credit balance. So what do? we shall debit share capital to reduce the excess that was brought forward. Okay, the excess I think is 45,000. So can you correct the error? It means share capital was overstated. Okay, it was 405, but they took 450.4. So this is an overstatement error. So can you reduce share capital? We shall reduce share capital by debiting it. Because share capital has a normal credit balance. So we shall reduce share capital by debiting it and credit suspense. Why? Because this is an overstatement error. Don't even think of the steps. Okay? Correct the overstatement by reducing share capital, and automatically the corresponding entry goes to the suspense, because it is an overstatement error, which we said we must introduce a suspense. Okay? Note number 9. A credit note received from a supplier 1.1 had been posted correctly in the supplier's account. So this simply means we don't have any issues with the supplier's account because they correctly posted in it. But they are saying no corresponding entry had been made. They made only a single entry. And we said errors where a single entry was made, we don't follow the steps. Okay? Just correct the other entry where it was not made, pass it, and the corresponding entry goes to the suspense. Okay? So let's go back and read. We received a credit note 1.1 from a supplier, and we only posted in the supplier's account. We didn't pass the corresponding entry. The question is, when you receive a credit note, what entries do you pass? What entries do you pass? Any trials?
CPA,
Yes, please.
you credit accounts payable. I think credit accounts payable. So you debit.
A credit note is as a result of the purchase returns you took back to the supplier. You had purchased from a supplier, then you found out that some goods maybe had challenges. You refunded back the goods to the supplier. And as a result of confirming the return, the supplier sends you a credit note. Okay? So this is as a result of the purchase return. So when you receive a credit note, it means the supplier has accepted your return. Okay? Has accepted your return. So what do? You reduce the supplier's balance in your books. So we can't credit the payables, as you said, Cynthia. We debit them instead, because payables reduce by debiting. Okay? So when you receive a credit note from a supplier, we debit payables and credit purchase returns, what we call returns outwards. So what they did, the supplier's account was properly posted. It means they debited the payables. Okay, so we can't talk about payables anywhere because these were correctly posted. What they didn't post are the purchase returns. So can you go and credit purchase returns? Because they told us they didn't post them. Okay, purchase returns, or what you call purchase returns outwards 1.1, and credit suspense. Because are we now together, Cynthia?
CPA, thank you.
Okay, so those are our errors that we have corrected. Note number 10, we don't correct errors for the loss given or profit given for the year. There is a reason as to why the examiner gave you this, and that's the reason as to why I'm teaching this number. I'm doing this number. Otherwise, I would be doing another topic, but I said I have to do this number because I have to emphasize some issues. Some students go an extra mile and pass double entries for the loss, and you ask yourself, then what are they passing? The examiner is just telling you the loss for the year ended 30th June was this amount. Full stop. This is not an error. that was committed. He's just telling you the loss or profit that was made that particular year. Therefore, never pass any double entry for this. Okay? So now let's come up with our suspense account. I'll put it just aside here. Suspense account. Yes, Doreen. Please
So
go
what do they
ahead.
mean? What do they mean in the question when they say ignore narrations?
Oh, okay, I'm going to explain that. That's a good question. It's showing me that you're trying to do numbers. You're trying to do numbers. Okay, if they say pass journal entries but ignore narrations, normally you know those who are working. I know some of you, most of you are working. When you are passing journal entries in the system, you put a description, you put a narration, the reason as to why you are passing journal entries. So here, for example, note number 1, we were correcting purchases. The purchases they had recognized were undercast, and they wanted us to increase them. Undercast means understated. So we had to increase them. So we debited the purchases and credited suspense. So normally, in practice, there is no journal entry you will pass without a description. You have to put a description. Now, for example, in brackets here, I can put increase in purchases. Increase in purchases. That is my narration. So that if someone comes and is following up this transaction, he can easily know why I was debiting purchases. I can say increase in purchases as a result of an undercast. Okay, as a result of an undercast. So someone reading, he can easily follow that I'm debiting purchases because it was just initially undercast. It is not a new purchase. Okay, so a narration is a description of the transaction that you have passed. Okay, so we do it in practice. Whichever journal entry we make in practice, we have to put a narration. Is it an expense? Then you have to elaborate which expenses. Okay, those double entry fields, those fields are there in our double entry fields in the systems that we use. The description part where you have to describe why you are passing that entry. So those are the narrations. But in exams, we no longer do them. Initially, at CPA, examiners would request for narrations. But things changed from 2016, where the syllabus first changed. We no longer do narrations. Are we together? But in practice, we do them because it is very important for tracking purposes. If someone is supervising your work and following up what double entries you did and for what, they easily show us why we did such a double entry. Okay. So let's pass the journal entry, let's post in the suspense. So when we go back to the question, they told us in the introduction that they introduced a suspense of 4150. But on which side are we supposed to post this figure? You go to your balance sheet and check under what section was the suspense put. The suspense was put under assets. It means liabilities were more than assets. And they decided to put a suspense on the assets so that they can balance off the balance sheet. So now, since the suspense is on the assets part, 4150, even when bringing forward, it is supposed to be put on the debit side because it was put under assets. Okay, it was put under assets. Hope I'm very clear on that. So note number 1 had the suspense and it's on the credit, and the suspense was about purchases. The suspense was about purchases, note number 1. Note number 2 did not have a suspense. Note number 3, we had a suspense about cash book, and the suspense was on the debit side. Note number 4, we didn't have a suspense. Number 5, we had a suspense on the debit, and it's about depreciation. So we shall bring it on the debit. Note number 6, we didn't have a suspense. Number 7, we didn't have a suspense. Number 8, we had a suspense on the share capital. It was on the credit side, 45,000. Note number 9, we had a suspense on the debit about purchase returns. About purchase returns. So these are the suspenses we had. So you get your totals. You get your totals. Automatically, the suspense has to balance. It shouldn't have any balances carried down. So the debit side has to balance with the credit side. Okay. So our suspense is balancing 48,000 at each side. Do we proceed?
Yes.
Okay.
I think we are good to go.
All right. Now, the reason that I chose to do this number, it's where I'm going. This number wants us to come up with, to prepare a corrected statement of financial position. Corrected statement of financial position. Do we have Muslims in this class right now? Right now, as I speak, in class?
Yes, CPA.
Did you fast in the first place?
Yes.
Okay, so we shall give our brother, because I'm even seeing Zubair somewhere, we shall give our brother around 10 minutes to break his fast. Okay, let's resume let's resume at 6 minutes past 7 or 7 minutes past 7. Guys, let's give them.
I could request if it could be 10 minutes past 7.
All right, we shall wait for that. During Lent, I normally give them some 10 minutes. Guys, let's be considerate, just 10 minutes. Thank you.
Thank you so much, sir.
See, Excel Limited is corrected statement of financial position as at 30th June 2020, as at 30th of June 2020. So our amounts are in shillings, are thousands. Our amounts are in shillings, are thousands. So we shall copy that statement the way it is. We shall copy it the way it is. So we have assets, and then we have inventory, plant and equipment, inventory. We have plant and equipment. Please copy it the way it is. The equipment, we have buildings. We have buildings. We have cash and bank. We have land. Have trade receivables. And then we have, so we shall not bring back the suspense. Reason being the suspense balanced, so the examiner does not need a suspense anymore. Then we go to equity and capital. We go to equity and liabilities. Under equity and liabilities, we have share capital, 10% loan. We have share capital. We have a 10% loan. We have expenses payable, share premium, expenses payable, have share premium. Have I left out anything? Share premium, share capital, 10% loan, expenses payable, share premium, retained profits, trade payables. So retained profits, trade payables. Then we have total. Have total equity and liabilities. These were total assets. Okay. So whenever they ask you for a corrected statement of either profit or loss or balance sheet, it is the easiest. So here we are just reproducing, and we shall be adjusting where appropriate. We only adjust where appropriate. But there are some figures that remain unchanged, okay? So in the middle here, we shall put our adjustments column, okay? Our adjustments column, we shall put our adjustments column, and then the other, we shall put our final figures, okay? So we shall only adjust those that need adjustments. And those that need adjustments are the ones that we passed double entry on or journal entries on. The ones that didn't have any journal entries up there, you bring them the way they are, okay? You bring them the way they are. But those ones that had journal entries up there, of course, automatically they will be affected, okay? They will be affected. Are we done writing that? Are we done coming up with that template?
Finished.
Okay, now let's begin. Inventory. Did we pass any entries about inventory? According to what we passed, we didn't have any entry we passed about inventory. Therefore, for inventory, we shall bring the way it is. 78540. You bring it the way it is. 78540. We don't have any adjustments in the inventory. Plant and equipment, the same thing. I don't remember passing any entry about plant and equipment in the journal entries. So 236560. 236560. So we shall bring it the way it is. Okay. But for the buildings, I remember we had an entry, our second entry. Therefore, the original figure is 3240. So you bring the 3240, okay, it is 3 to 4,000. Okay, you bring the original figure, and then what did we do in the journal? In the journal entries, we debited buildings. Therefore, we shall add, okay, 65560 to this figure. We shall add 65560 to that figure. We shall add it there. And then since it has a depreciation, we computed the depreciation. The depreciation, the accumulated depreciation normally reduces the book value, okay, of the figure of the asset. Therefore, we shall less 1311. Why do we less 1311? Because the net book value, the accumulated depreciation reduces the net book value of the asset. And remember, this is a balance sheet, so we less it. Therefore, in our final column, those are the figures that you shall have. So we shall have our new figure of the buildings as 388249. You get what was given. Since we debited buildings in the journal entries, you increase buildings, but at the same time, the accumulated depreciation will reduce the cost of the buildings. Because this is a balance sheet, we need to get the book values, okay? Then cash and bank, we had entries of cash and bank. So cash and bank is 54,500. 54,500. And what happened? In the first scenario, note number 3, we debited our cash 550. So debiting cash, it means a plus, okay? Cash is increasing 550. You come and add it there. That was note number 3. Note which other entry had cash. We had the note number 7, bank charges. Bank charges, you see we debited the cash, we credited the cash book. So we shall decrease our cash book by 67, because bank charges, I mean reduce bank balances. So we reduced the bank with 67, and we didn't have any other entry affecting cash. Yes, please.
Kindly, it's a request, you're a bit speedy.
Okay. I'm going to slow down on the next. But what we are trying to do, what we passed in the journal entries, we are just reflecting it in the adjustments column. That you begin with what was given of that account, that any account that has an entry in the journals has to be adjusted, as long as it affects the balance sheet. Now, for the cash book or cash and bank, we had this figure given as our original figure. You begin with that. Then you go look for any entry that affected either cash or bank. And on note number 3, we debited cash book. Debiting cash book means cash is increasing. So we add that figure there. Then bank charges, crediting cash book or bank, it means bank is reducing. That's why we have less 67 to get the final cash figure. Okay? For the land, we didn't pass any entry on land, so you take it the way it is. 304,850. You take it the way it is. It has no adjustment because we didn't pass any journal entries on land. Receivables, of course, we are adjusting it because we saw debtors were affected. So 95,850. 95850 is the original figure. So what entries did we pass on the datas? Datas were on note number 3. We credited datas with 5.5, okay, 5,500. Crediting datas, it means reducing them, because data is reduced by crediting them, their assets, okay? So since you credited them, you come and less, okay? Which other entry had datas? Note number 6 had datas. Datas we credited in note number 6, 5.6. You come still and less it, because crediting datas means reducing them, okay? And those are the entries that had datas. So those are our adjustments. So ideally what we passed up there is what we are doing. We are not doing any science, just your double entry, okay? And then we shall have our total assets here. We shall have our total assets here. So those are our total assets. Those are our total assets after we have adjusted them. After we have adjusted them. So when you go to share capital, we also adjusted it. The original figure is 450,400. But remember, we debited share capital with 45,000. We reduced it. They had taken a higher figure. So we shall also reduce it by 45,000. So our new share capital is that figure, our new share capital. So the bank loan did not have any impact, so bring it the way it is, 434,301. So you bring it the way it is. Expenses payable did not have any impact. We didn't pass any journal entries on it, 23,450. So you bring it the way it is. Premium, it didn't have any entry. So you bring it the way it is, 123,780. Retained earnings, I normally tell students, please first skip it. You first skip it. I'll tell you why. Then the payables, we didn't have any entries that affected trade payables. Therefore, we shall also bring it the way it is. So payables 45,756. We shall bring it the way it is. It is. Okay. Remember, our total liabilities and equity should be equaling to the total assets. Okay. Should be equaling to that. And we are going to see. Now, under liabilities and equity, you realize we are missing one figure. And that figure is called retained profits or retained earnings. You realize it's the figure that we are missing. Retained profits or retained earnings. Okay? So what do we do? So I'll give you the most easiest step or the most easiest way. Though that's not what I want you to do in exams. Okay? But I'll show you what you have to do in exams. But the most easiest way, this total asset, total equity and liabilities should be equaling to the total assets. And you have only one unknown here down. You can get it by getting the total assets and liabilities. You less it with these figures. You less it with these other figures that you have on the liabilities side and capital. So it will give you that figure. So our retained profits are 115,245. How do you get them easily? You get the total assets. You less these other figures you have down here. Of course, you will get the retained earnings, 115,245. When you less these other figures that I'm putting in green, when you less them, you get 115,245. That is the most easiest way. Total assets minus those figures, because it is the only unknown you had just on this downer side. But that's not how we get it. So the way I've gotten it, it is so mechanical. We only use it if we don't have time in exams, and you see that actually you need it so fast. to balance your balance sheet, but this formula is given marks. So now the formula that I'm giving you is the formula that I wanted to teach specifically this class, and also show you these adjustments, show you how to do these adjustments, okay? But this is the formula that I wanted to teach in class, and this is the one. So how do you get retained earnings? Come here, we are going to see how we get retained earnings. You get retained earnings after getting the corrected statement, the corrected profit, okay? Net loss, the corrected net loss or net profit, whichever will come out, okay? So we are trying to get this figure that I've highlighted in yellow. How I have gotten it is so mechanical, okay? And this formula of getting it is awarded marks. So if you do how I have done, you will not get marks for this. But why am I doing this is to also show you, we have seen numbers where the examiner is asking for after you passing journal entries and coming up with suspense accounts. We've seen numbers where the examiner is telling students to come up with a statement of corrected net profit. And this is how we get it. And I'll not do any number that has it. I'm doing this formula to show you how to get the statement of corrected net profit. Okay? And this is the reason as to why the examiner gave you the net profit for the year in note number 10. Okay? We only use this note when we are getting the corrected net profit or net loss, because this net loss was arrived at when the number had errors. And since you have corrected the errors, can you also come and get the corrected net loss for the period? I'm calling it corrected net loss or corrected net profit because it may begin as a net loss. So because we shall begin with net loss for the year, the one that was given by the examiner. Net loss for the year, and this is how much? 8,750, 8,750.6. Because remember, we are chopping off 3 zeros, okay? 0.6. So you may begin with the net loss for the year, but at the end of the day, or the end result, it turns out to be a positive. That's why I'm calling it net profit stroke net. I'm calling it corrected net loss or stroke net profit, because it may turn out to be a profit at the end of the day. So now you begin with that loss that the examiner has given. If it's a profit, begin with the net profit for the year, the examiner, which the examiner will have given, okay? This working that we are doing to get retained earnings can be asked as a standalone number. I repeat, they can tell you part A, pass journal entries to correct the errors. Part B, prepare a suspense account. Part 3, they tell you to come up with a corrected net, with a statement of corrected net profit. In that way, they don't want a profit or loss statement. No, they want you to begin with a net profit or loss that was given, adjust it, and then come to the corrected net profit. Are we together, guys? Okay, let's proceed. Now, when we are dealing with the corrected net profit, we go back to our journal entries and only pick up those items that have an impact on the profit, because we want to correct the profit. Are we together? So you only pick up those items that are found in the profit or loss statement. Profit or loss statement, it has incomes and expenses. Therefore, I don't expect you to come and bring out buildings and bring it here, that buildings affected the profit. Okay? No, guys, you only pick up that line that affects the profit or loss, because that's where we find the net profit or net loss. For example, the purchases. We know that purchases are found in the profit or loss statement under cost of sales. And the purchases had been undercast, but now we increased them. So you ask yourself, how does the increase in purchases affect my profit? Guys, how does an increase in purchases affect the profit? How does it affect? Does it increase profit or does it reduce profit? When purchases increase, what happens? Okay, let me save you. When purchases increase, they lead to an increase in cost of sales, which leads to a decrease in profit. Therefore, an increase in purchases will reduce profit. And whatever transaction reduces profit, you put it in brackets. I repeat, purchases reduce profits. How does it come about? When purchases increase, you know very well purchases are put under cost of sales. When purchases increase, the cost of sales figure also increases. And since cost of sales is a cost, it is an expense. When the cost of sales increases, automatically the gross profit reduces. Therefore, an increase in purchases will reduce the profit. Whereas an increase in sales increases profit. I think you know that. Because the more we sell, the more the revenues, the more the profits. But increase in purchases leads to an increase in cost of sales that eventually leads to a decrease in gross profit. Any questions? Now, for a smart student should be writing that statement because it can also be asked in objective, surprisingly. Okay? An increase in purchases leads to an increase in cost of sales that eventually leads to a decrease in profit. Therefore, increase in purchases. Therefore, increase in purchases. Osbat, please. Osbat, you are giving us feedback. Osbat. Please mute. An increase in purchases leads to an increase in cost of sales that eventually leads to a decrease in profit. Okay? All right, I proceed. So, note one is done. Purchases will reduce our profits, okay? Because increase in purchases reduce profits. Then buildings, of course, this one affected the balance sheet. We adjusted it. But the repairs, you go line per line, okay? Repairs affect the profit or loss, but we credited repairs. We reduced repairs. When expenses are reducing, the profits increase. Therefore, the 65560, is it the correct figure? 65560 will remain as a positive because a decrease in expenses will increase the profit. Since our repairs were reduced, we credited repairs. Automatically, the expenses are reducing. And when expenses are reducing, the profits do what? Increase. Therefore, you leave it as a positive. Okay? Another in line is depreciation. Another in line is depreciation. Okay? Depreciation is an expense. When expenses are increasing, the profit reduces. Okay? Therefore, that one will be in the brackets because an expense called depreciation was debited or is increasing. When you debit an expense, it means expenses are increasing. So the depreciation. So the essence of this statement, the examiner is testing whether you know the impact of these items that affect the profit, whether you know their impact on the profit. Okay? That's the only essence the examiner is looking for, whether you know their impact on the profit. When expenses are increasing or when you introduce an expense, automatically the profit reduces. And that will be in brackets. When an expense is reducing, automatically profits are increasing. So it will be a positive because it increases profit. Are we together? Then accumulated depreciation, it affects the balance sheet, and we saw how it affected it because we reduced it under the buildings. So then cash book, this is a balance sheet item, so it will not affect our profit. Debtors, it is a balance sheet item, it will not affect our profit, so you jump. Those that don't affect profit or loss, you jump them. Note number 6.5, we are reducing depreciation of computers. We credited it. And we said when expenses are reducing, our profits are doing what? Are increasing. So this is depreciation. It was for computers. This was a decrease. So when expenses are reducing, profits are increasing. Therefore, you leave it as a positive because we were reducing an expense. Like the way we did on repairs. Repairs were reducing, we had credited them. So you leave them as positives because a decrease in expenses leads to an increase in profit. Okay? Then note number 6. Note number 6, we debited sales. Debiting sales, it means sales are reducing. Therefore, our profit will be reducing as well. So you come here and say sales. Since we debited sales, automatically our profit is reducing. Therefore, you put it in brackets. But if sales were increasing, then we would have left it as a positive because increase in sales leads to an increase in profit. Okay? But a decrease in sales leads to a decrease in profit. Likewise, purchases, an increase in purchases leads to a decrease in profit. However, a decrease in purchases will lead to an increase in profit. The reverse is true. Okay? And then these are debtors, they affected the balance sheet. Bank charges, this is an expense. That expenses, an introduction of an expense or debiting of an expense leads to a decrease in the profit. So we shall put that in the bracket 67. The profit will reduce as a result of that bank charge. This is cash book, that is balance sheet. Share capital, that is balance sheet. And then purchase returns, lastly. So purchase returns, it affects the profit because it is tagged to purchases. Purchase returns, remember purchase returns leads to a decrease in purchases. When purchases reduce, the profit increases. Okay? Because purchase returns reduce the purchases. And we said an increase in purchases leads to an increase in the costs, in the cost of sales, therefore a decrease in profit. So increase in purchases reduce profits. Whereas a decrease in purchases increase profit. So purchase returns reduce purchases. Okay? Reduce purchases, therefore an increase in the profit. So those are the items that we have passed double entry on. So when you make a new computation, we have a profit. So now we have a net profit. From a loss to a profit, okay? From a loss to a profit. This is the net profit for the year. This loss was arrived at after the number having errors. So after correcting errors, the same journal entries we use to correct errors, we pick out those items that affect the profit or loss and adjust their impact to the profit. Then finally, we've gotten a profit. Okay? A profit. Guys, any questions before I proceed? Because you first get the corrected profit, then we get the new retained earnings. Guys, please ask, don't fear.
CP, I have a question.
Yes.
Yeah.
My question is on the share capital.
Yes.
I thought the share capital affects the profit and loss.
Why? Because a share capital is a balance sheet item. We don't find share capital in profit or loss. This is equity. It is a balance sheet item, so it will never affect the profit or loss. That's why I began by saying we only consider those items we find in the profit or loss statement, and we find there incomes and expenses. Apart from those items we find under cost of sales, opening stock, purchases, closing stock. Okay, purchase returns there, closing stock, but we find there typically expenses and incomes. So the equity is found in the balance sheet, therefore it will not affect our profit, really.
Okay, got it. Thank you.
Doreen?
Sir, the net profit that we get here, is it what we write in our statement as the retained profit?
No, I told you What we are going to do next is to get the new retained earnings, but you begin by correcting the profit. Then after this, we are now going to compute the new retained earnings.
Okay.
Okay. I saw Ken putting up the hand. Ken?
No, I think as you're explaining to somebody there, you cleared my.
Okay, good. Fred was his hand was up. Fred?
Yes, CPA, yes.
Yes.
Yes, CPA. Some light on the treatment of repairs and bank charges here under calculated net loss stroke profit. I think I missed something here.
Okay. Now, when you realize very well, if you realize very well, in the journal entries we passed, the repairs were credited. The repairs being credited were reducing repairs. Why? Because the original error, they had treated the cost of buildings as repairs. They had treated it as an expense, and you had to remove that expense. That's why we credited repairs. Crediting repairs, it means you are reducing the repairs costs, okay? And by the fact that you are reducing repairs costs, it means expenses are reducing. The repairs, which was initially, for example, 1 million, after reversing this error, it will not remain 1 million. It will reduce by the reversal that you have made. It means the expense will be reducing. And when expenses are reducing, we leave them as a positive. Why? Because a decrease in expenses increases profit. Okay? Now, for the bank charges, we are debiting bank charges. It means we are recognizing an expense. Expenses are recognized by debiting them. Okay? And since we are debiting, we are recognizing an expense called bank charges. Increase in expenses lead to a decrease in the profit. That's why we put it in brackets, because it reduces the profit, because we debited expenses. Unlike repairs where we are reducing expenses. Are we together, Fred?
Yeah, it comes from far, but I finally have gotten it.
The principle is a decrease in expenses leads to an increase in profit. And that's the fact. And an increase in expenses leads to a reduction in the profits. And that's the principle that will never change. Okay?
Yeah, thank you very much.
Solomon had put up a hand as well.
Yes, CPA. For me, my concern is on the corrected statement for the corrected statement of what? The first one you did on share capital, because you were when an item is debited, you were adding, but for share capital particularly, you subtracted. So I didn't understand that other bit of it.
Share capital, no, don't cram adding what? Just know the impact it has. Share capital, what they did, they had, the question was very clear. The share capital of 405 was brought forward as 450. It means they had, this share capital you see here, 450, it has an error. They overstated it because they told you it was 405.4. That's why even when correcting the error, we debited share capital. Why? To reduce the share capital figure that was taken, because they had taken a higher figure. Okay? And share capital is a credit. You can only reduce it when you debit it. That's why we debited it with the overstatement. That's why even when we went to the balance sheet, we got the original wrong figure minus the overstatement that we debited. Okay? Because the correct figure is 405,400. This figure we got is the correct figure. The examiner told you that the share capital of this amount was brought forward in error as 450. Okay? So it does not mean that what what you add in the profit or loss is what you add in the balance sheet. No. As an accounting student, you need to know the impact of the double entries you made to the financial statements. Okay? And that's what we are trying to do. Even that's what we are trying to do in the balance sheet. Okay? By getting the original amount and adjusting it with the entries we passed. Even in the profit or loss, it's what we are doing. That when purchases increase, what impact does it have on the profit? Does it increase the profit? Does it reduce the profit? Those are the questions that I've been answering when explaining, not per item. Okay?
Thank you, CPA.
Yes, Newton.
Yes, CPA. Yes. Now, what if there was a opening and closing inventory in the adjustment? How would the treatment be?
Of course, those numbers are there where they have given you of undercast in the opening inventory, overcast in closing inventory. Now, the thing is, closing inventory will move, opening inventory will move hand in hand with purchases, okay? Because those are positives. Now, when closing inventory, when opening inventory is increasing, okay? When opening inventory is increasing, automatically cost of sales is also increasing. Therefore, it will reduce the profit. It will reduce the profit. We have two variables. Only that you've taken me away from the question, but and I don't have battery. Closing stock, then here we have, let me begin with opening stock. Opening stock, because when you grasp one, you have grasped the other. Okay. Now, when opening stock is increasing, it will automatically lead to an increase in the cost of sales, therefore leading to a decrease in profit. So an increase in opening stock reduces profit, and a decrease in opening stock leads to an increase in the profit. Okay? Leads to an increase in the profit. Whereas for the closing stock, the closing stock, the reverse is true. Here we said an increase in the opening stock will automatically lead to a decrease in the profit. Okay? Why? Because an increase in the opening stock leads to an increase in the cost of sales, thus reducing the profit. Whereas an increase in the closing stock, okay, an increase in the closing stock will automatically lead to an increase in the profit. Why? Because when the closing stock is increasing, automatically the cost of sales will be reducing and thus increasing the profit. Remember, closing stock appears as a negative in the cost of sales, okay? So whenever the negative is increasing in the cost of sales, automatically the cost of sales is reducing, thus increasing the profit. And when the closing stock is reducing, automatically the cost of sales will increase, thus leading to a decrease in the profit. So that is the impact. Opening stock, when it is increasing, automatically cost of sales will increase, thus reducing the profit. When closing stock is increasing, the cost of sales will reduce, thus increasing the profit. Have I answered you?
Yeah, I'm okay with it now.
Okay. I know you might find numbers having this opening and closing stock, and they want you to correct there to find the corrected net profit. Okay, let's come back here. I thought I could teach bank reconciliation, but my battery is warning and I don't have electricity home. So what we are going to do, I'll just humbly request that after doing this number, I don't have any alternative but to teach you on Saturday evening, like the way I did this weekend. Saturday at 6:30, okay, to compensate for this class, because I want us to move on the same pace with the physical class students. That will be my prayer, guys, my request. But let's complete this. Now, we have gotten the corrected statement of net profit, and we have a new figure called a net profit. Now, we are going to adjust our retained earnings to see whether we shall get these retained earnings that we got mechanically, okay? So what do? You come and say retained earnings as per balance sheet. The one that was given in the balance sheet. The one that was given in the balance sheet. They gave us this figure, retained profits, 56,763. Okay, 56,763. That is the retained earnings that was given. But remember, this retained earnings already it has this profit, net loss that had been reported. Because by the time they prepare a balance sheet like this, they have already considered the results for the year in the retained earnings. I think you know that because we have done balance sheets very many times. Where we get the retained earnings under equity, we add on the profit for the year. Okay? So by the time they do a balance sheet, they have already added in the annual results, the annual profit or loss for the year. Okay? So the net loss that they reported here in note number 10 is already included in these retained profits. So the loss already reduced this profit because a loss will reduce the retained earnings. Okay? And the profit will increase. Since the loss is already put in here, so what we normally do, we first remove that loss. You first remove that loss from the retained earnings because we want to get retained earnings that are correct, that are not diluted. Okay? We say here less loss. Okay? Less. No, actually we add back loss because remember the loss had less. So we add back the loss. We don't put it in brackets actually. We add back the loss because we want to get the retained earnings that existed before we made the loss. Okay, remember the loss reduced retained earnings. This simply means that the original retained earnings is this figure. Original retained earnings. Retained earnings is this figure. The figure that existed before we less the loss to get this retained earnings in the balance sheet. It was 65,524. Hope we are following. Since they had made a loss, the loss normally reduces retained earnings. But since this figure is 56,763, automatically for us to go back to the original retained earnings, we just add back the loss on this figure to get the original retained earnings. Now, someone will ask, what if it was a profit? What if we had made a profit? Of course, a net profit for the year. What if this figure was a profit initially? It means that the retained earnings we are seeing in the balance sheet already have an element of the profit. So if we want to go back to the original retained earnings, for it will less if it is a profit, because remember profits are added on retained earnings. So if you want to go back to original retained earnings, we shall less the profits. But for these losses reduce retained earnings. So if you want to go back to original retained earnings, you add back the loss to the profit. So this is the original retained earnings. So now how are we getting the new retained earnings? So you get the original retained earnings, you add the net profit. You add the net profit. And the net profit we have already computed it is 49,729. So our new retained earnings, it is 65 plus 49, which is giving us the other figure we got mechanically. I'm sure it is the figure that they are giving us, 115,255. 255, yeah, I'm getting 245. Is it because of round offs? It should be because of round offs. Okay, this is the original figure. And then the original retained earnings. And then this here we shall get this plus this. Yes, Jocelyn.
CPI, I think the figure you added for the loss is wrong. It's 87 something, not 876.
875. Okay, thank you. Yeah, I was wondering. So we are getting the same retained earnings figure that we got mechanistically. I think you are seeing 115,245. But this should be the working for that figure. But I first gave you the other approach in case you are time barred in exams. Because this working, they can give it around 3 marks or 4 marks. Okay? But if you are time barred in an exam, you can just get the total, as long as you only have one missing item here, you just get total assets, you less all these figures down, the balance is that. But if you have time, and more so if you want to get marks for this retained earnings, you first get the corrected profit, and after getting corrected profit, add just your retained earnings. Add just your retained earnings. So to simplify this that I've done here, I can say I get the retained earnings that were reported, okay, in the balance sheet, okay? The retained earnings that were reported in the balance sheet, these retained earnings. Of course, I know that this figure already has a loss. Which loss was made, okay? I do what? I add back the loss. If it's a loss, you add back. If it's a profit that was made earlier, you less, okay? I add back the loss. And when adding back, this bracket alone will give you the original retained earnings, okay? The original retained earnings. Then we add the new profit or loss, the new profit or loss, the new profit or loss that you have received when after adjusting your profit or loss. It will give you the new retained earnings. It will give you the new retained earnings, okay? So this is the loss. If it's a profit, I said that was made earlier, less it, okay? So, and I told you this corrected net profit can be examined as a standalone. We have seen numbers. If I can go to the question bank, okay, and I search for corrected net profit, it is already here. This is March 2022, question 6. Guys, if I were you, I should try this. March 2022, question 6, where the examiner, after correcting errors, you pass the journal entries, to correct errors, you pass a suspense account. After passing a suspense account and balancing it off, you come up with the corrected net profit. Ideally, he must have given you a profit for the year or loss for the year somewhere. If I'm to check chap, it is here. The draft statement of profit or loss showed a profit. So here they had made a profit. Therefore, if you want to come up with a corrected net profit, you begin with profit for the year, this figure, and then keep adjusting it according to the journal entries you will have passed. But only those journal entries that affect the profit or loss, okay? You must know the impact on the profit of those entries. Then come up with a new profit or loss for the year, okay? Like exactly the way we've done. But I must warn, this number that I've opened March 2022, I am sure if you do it, the suspense is not balancing. The suspense has a difference of 200,000, okay? A difference of 200,000. When you look at the examiner's solutions, the examiner forced it to balance, but when you add manually his figures, the debit of the suspense and the debit and the credit of the suspense, they are not balancing, but in the totals is indicating that they are balancing. That when you add one by one, debit and credits of the suspense, they have a difference of 200,000 or 200, okay? Depending on whether you are maintaining zeros or not. 200 shillings or 200,000. Therefore, what does it communicate to you? That the examiner, sometimes he sets questions with error. This one is one of them. I know the other is in 2017. I don't remember the sitting. That the number also has an error. The subspace is not balancing. For that one of 2017, in the solutions, he recognized it that the subspace is not balancing. Okay, but this one he didn't recognize. But when you add manually in his solution in the subspace, the debit is not equaling to the credit, despite the fact that for him it shows that they are balancing. Okay, because I did this number even before solutions came out. I know it very well. So please try it out. I've already told you the challenge with it. Pass those entries to correct errors, after which you pass suspense account and correct the profit. You'll find other numbers of corrected net profit. It is here, one of them is here also. September 2022. Okay, September 2022, question 2. You pass journal entries to correct errors, balance of the suspense account, then statement of corrected net profit, what we have done, then redrafted statement of financial position, we have done it. Okay? It is common. Even another one is here, November 2023. This shows that these things are common. Just imagine from 2022, 2023, almost every sitting, correction of errors is there. It is a topic that almost comes every sitting. Net profit, corrected net profit, you have seen it. Corrected balance sheet, you have seen it. And we have done both of them today. Okay? Today. Another one is here, August 2017, same story. So guys, practice these numbers. Please practice these numbers. Otherwise, if I'm to do these numbers and finish them, we shall not complete the syllabus. Okay? Let us do 3, 4. That's why I try to do every topic a minimum of 3 numbers, so that I can handle all these bits, so that when you practice, at least you have a reference where you can make, because almost I teach everything in the topic. Okay? So guys, I so much wanted to do a number of bank reconciliation today, but because my battery is reading, I thought power could come. It is at 15%. I thought power could come back when I'm teaching, but surprisingly, I've received a message that our line has a problem. Therefore, even if I start bank reconciliation, I'll not do even half a number, because I need to first explain the essay bit, then we do 2 numbers. But on Saturday, let's have this class on Saturday, guys, at 6:30. And we do it and finish it that day. I normally do around 3 numbers and we finish it. It is a topic that I teach after correction of errors because it has some link. Somewhere, somehow, when reconciling, we apply some knowledge of correction of errors. Okay? Guys, it is my humble request, but please make sure, let us do these numbers. Any questions before I close? Any questions before I close? What I'm going to do, I'm going to share other recordings of correction of errors in the group, in the recordings folder. I'm going to get a recording from the December sitting last year. I know I might do different numbers in different sittings. So it has different numbers. Please, if you have time, please go there and listen into that recording. I'll put correction of errors December 2024 so that you can distinguish it from this one. Okay? Any questions? Yes, Linda?